Hello everyone, today we would like to present BF30403 International Financial Economics Semester 2 Section 2024-2025. Today we would like to present regarding Group Assignment International Bond Market prepared for Dr. Wong Hong Tyson, prepared by Group 14. We are from Group 14. My name is Anbhu, son of Kumar. My metric number is BB22161105. Today I would like to present Introduction to the International Bond Market. Overview of the international bond market is a key component of the international financial system, enables government, corporation and supranational entities to raise large-scale capital globally, offer access to border investment alternative and investor bases, encourage cross-border capital flow and global financial integration. Second is type of instrument: foreign bonds, Euro bonds, global bonds, supranational bond, emerging market bonds. Next, international bond market credit rating, access issuers, credit worthiness and default risk, major rating agencies like Moody's, S&P and Fitch, rating influence bond yields and investor confidence. Last is international equity market, enable international equity investment and diversification, influenced by global economic trend, political stability and currency fluctuation, opportunity in both developed and emerging market. Risks include exchange rate volatility and regulatory difference.
Good morning. My name is LHILEY with matrix number BB22110346. Today I will presenting the objective of our research. Our research has three main objectives. First, to study the type of instrument available in the international bond market. Second, to assess the significance and influence of credit rating on the international bond markets. And third one is to assess the relationship between international equity market and the bond market. Next, methodology. For this research, we use three main methods. First, secondary data analysis. We focus on classification of international bond instrument, role of credit rating, and connection with international equity market. Second, we use case study method to understand the practical implication of credit rating, bond equity market interaction, and investor behavior under stress. The third one is geography scope. The key economy like United States, United Kingdom, and Japan, and emerging market like India, Brazil, and Malaysia.
A very good morning to Dr. Wong. My name is AINA with matrix number BB22110442. So I'm going to continue the presentation of my group. One of the most fundamental instruments in the international bond market is a foreign bond. A foreign bond is issued by a non-domestic entity in a local market and denominated in the currency of that market. These bonds are subjected to regulation, registration requirement and also disclosure standard of the country in which they are issued. Another major category is the Euro bond, which is a bond issued in a currency that is different from the currency of the country in which the bond is issued. Despite the name, Eurobonds are not confined to Euro. For instance, a US dollar denominated bond issued in Singapore by a Canadian company qualify as a Eurobond. These bonds are typically underwritten by international syndicates, are not regulated by the domestic financial authorities of any single country, making them highly flexible and appealing for multinational issuers. Additionally, global bonds combine characteristics of both Euro bond and foreign bond. They are issued simultaneously in multiple financial markets and are often denominated in major global currencies such as the US dollar. Global bonds are typically large in size and are issued by well-established entities with strong credit rating, such as sovereign governments, multinational corporations, or international financial institutions. In addition to this, supranational bonds are an important segment of the international bond market. These are issued by supranational organizations such as the World Bank, the International Monetary Fund (IMF), and the European Investment Bank (EIB). These institutions are formed by multiple governments and are typically mandated to finance development projects, humanitarian effort, or infrastructure initiatives across countries. Lastly, emerging market bond represent debt securities issued by government or corporation in developing countries. This bond can be denominated in local currency or major global currency like the US dollar or the euro, while they offer higher yield to compensate for risk associated with global politic instability, economic volatility, and currency fluctuation. They are also more speculative in nature. So that's all for me. I'm going to pass the presentation to the next presenter.
Hello, I'm EUNICIA Maria Magdalena Gonçalves Fontes, and my metric number is BB222-71153. So today I would like to talk about international bond market credit ratings and their key importance and impacts. To begin, international bond market credit ratings are scores given by agencies like Standard & Poor's, Moody's, and Fitch. These ratings measure how safe or risky it is to lend money to a country or a company in the international bond market. So there are 5 key importance and impacts. First is the influence on investor decisions and market behaviors. This means credit ratings are like a guide for investors. When a country or a company gets a downgrade, it is often to lead to bond sales off, especially in developing countries. This can cause big changes in the market and credit instability, so credit ratings don't just inform investors, they actually affect what investors do. Second is the impact on borrowing cost and bond pricing. This means credit ratings also influence how much a country or a company has to pay to borrow money. So third is the effect on institutional investors and market stability. This means large investors like pension funds and insurance companies are usually only allowed to buy bonds with a good rating. If a bond is downgraded to junk, these investors are forced to sell it, which can make prices fall even more. This puts pressure on the market and can lead to wider financial problems. Fourth is the confidence and capital flows. This means credit ratings are also influence global confidence. A downgrade can cause investors to pull out their money, which may lead to a fall in the country's currency value and reduce foreign investment. This is especially serious for emerging markets where their small ratings changes can have big effects. Last but not least, we have the criticisms and the need for reform. Although credit ratings are helpful, they are not perfect. During the 2008 financial crisis, rating agencies were blamed for giving high ratings to risky products. There are also concerns about conflict of interest since agencies are often paid by the companies they rate. That's why many people believe the system needs to be more transparent, fair, and accurate. To conclude, credit ratings are a powerful part of the international bond market. They help measure risk, guide investment, and influence borrowing costs. That's it. Thank you.
Hi, my name is SYAKIRAH and my membership number is BB22103. Now I will talk about the next subtopic, which is international equity market. For definition and scope, international equity market input or platform, exchange and OTC, where foreign company stock are traded. River market like US, UK, Japan offer stability and liquidity, while emerging market like India, West Asia provide higher potential despite volatility. The scope also covers multinational listing and cross-border branches, clearing business and international barriers. For market structure, these markets are divided into primary nostalgia via IBOS and secondary like trading of executive share. The primary market raises capital for upper curve, while the secondary market enhances liquidity and price recovery. Page exchange include NYSE, LHC, ESE, and MUZAMIR. Next is redeeming-ism. First, market ponder and instruction to buy or sell and the best available current price. It ensures from execution, but the result in price slippage in volatile market. Second is demand order, an order to transact at a specific price or better. It offers price control but may not be executed if market conditions do not meet the set limit. Third is stop order, an order that activates once a pin predetermined crash ECX. It is commonly used to limit potential losses or lock it gains. For benchmark indices, first is MSCI World Index cover large and mid-cap stock in equity-driven markets. Second is MSCI Emerging Market Index, track stock across 24 emerging markets. And next is FTSE or World Index equals stock from developed and emerging economies. For investment instrument, American Depository Receipt, Global Depository Receipt, Exchange Deposits and Spot Knowledge is material funds and cross and parts. Factors that influence return is macroeconomic factors like interest rate, currency and inflation, political stability and regulatory framework. Next is market liquidity and accessibility and corporate governance and transparency. For case study, here is Malaysian equity market, Malaysia. Malaysia offers US investor diversification through sectors like banking, palm oil, and semiconductor, supported by a stable political and legal environment. Strategies include stock selection and ETFs, tracking the FDIC Bursa Malaysia (KLCI). Local advisors have navigate regulation and cultural factors. The low correlation with US market provide reduced volatility, competitive returns, and currency hedging benefits through ringgit exposure. That's all from me. I will pass to the next.
In this section, I will explain the significance of our research. First, we move to research question. What are the classification and characteristic of international bond instrument? Second, how do credit rating impact international bond valuation and borrowing costs? The third one, what is the nature of the relationship between global bond market and equity market? Next, we move to problem statement. There are lack of knowledge about the structure and function of international bond instrument, unclear impact of credit rating on investment decision, limited research on the behavior of bond and stock market during the international financial crisis. To solve the problem, they have many solutions. It's provide a structure analysis of international bonds to support informed investment decision, explain the influence of credit rating agency on market perception and funding costs to promote better risk management. Examine the relationship between bond and stock to enhance understanding of market interdependence.
In conclusion, diversity of international bond instruments. The international bond market offers various instruments such as foreign bonds, Euro bonds, global bonds, supranational bonds, and emerging market bonds, each with distinct characteristics regarding currency denomination, regulatory environment, and investor base. The next, significance of credit rating in international bond market. Credit rating provided by agencies like Standard & Poor's, Moody's, and Fitch are crucial for assessing the creditworthiness of bond issuers, influencing investor decision and borrowing costs. The downgrade in credit rating can lead to increased yield and capital flight, especially in emerging market, while an upgrade can enhance investor confidence. The next is dynamic of international equity market. The international equity market facilitates global capital flow and portfolio diversification, encompassing developed markets such as UK, US, and Japan, characterized by high liquidity and strong governance, and emerging markets such as India, Brazil, and Malaysia, offering growth opportunity and meet higher risk. After that, interconnection between bond and equity market. The bond and equity market are interrelated with shift in one often impacting the other, particularly during economic downturn when capital may flow from equities to bonds as an investor seeks safer asset. Last and least, research significance and practical implication. This research address knowledge gap regarding the classification of international bond instruments, the impact of credit rating, and the interplay between bond and equity market. Thank you. That's all from us.